And get this up. All right, so we're going to continue on talking about chapter 4. We're going to do some calculations today. Yay! I know those are always fun to do. Sorry, I just want to make sure I've got this going. Yep. Okay, so I wrote up here, and I have I've put this in Blackboard as well. Kind of a little summary of the federal income tax withholding, the information that's needed, and the different methods that we have. Now, we have not gone through yet the pre-2019 method. We will be going through that, but I wanted to put it up here as well to show you that the two methods that we have, the wage bracket method and the percentage method, apply to both of these pre-2019, I should be pre-2020 actually, pre-2020 method and post-2019 method. Put that up there. Because in 2019, we were using that old method. So when we go through this and go through the steps for figuring out how each of these methods work, just kind of keep in the back of your mind that, okay, these are going to be very similar to what we do with that pre-2020 method as well, okay, which is nice, kind of the same steps involved. You'll see that the forms or the tables that are used look a little bit different because there's some different information that we need for each of these methods. Now, well, let me back up to here first. So the wage bracket method, this method is fairly simple. Once we get that taxable income and we know all of these pieces of information, then all we have to do is look at a table to figure out what the withholding is when we're using the wage bracket method. So it's simple. It's you know, just triangulating there what the amounts on that table. However, tables don't go on for infinity, right? So they end at a certain point, which means that once income gets to a certain level, we cannot use this method anymore. Now that income level isn't, it doesn't apply to each of the different, it's different for each table. So I can't tell you, hey, once income gets to over $100,000 a year, you're no longer going to use that table. Or once it gets to over $2,000 a pay period, you're no longer going to use that table. You just have to look at the table to see if, you know, presuming you've got the correct table that you're looking at, you have to look at the table and see, okay, well, if my income level goes over that, I can't use this wage bracket method anymore. And we'll look at that table. I'll show you. I think I did kind of give you a little preview before we left for spring break on that. But so it's easy to use, but there are limits to it. Not everybody, not every employee can use this. You can't use this for every employee. The percentage method involves some calculations on our part. It is more complex, but there's no income limit. You can use it for, you know, infinity, income up to infinity. You can also use it for income that is below that you would ordinarily be able to use the wage bracket method. You can use this for all income. Okay, but it is more complex. It's also more accurate. It's down to the penny. So when we're using the table, we're rounding. Okay, so you'll see, and you've got some problems in your homework where you have to use both, and you'll see that there's a difference in the result between the two. And I'll show you why that is when we look at the table, when we look at both of these methods. Now, the information needed, I had mentioned, and we talked about the fact that there are 4 pieces of information that we need in order to calculate federal income tax withholding. For either one of these methods, we need 4 pieces of information. However, Two of the pieces of information are different depending upon the method that you're using. So those are the ones I put in red here. These are different. So for both of them, we need to know taxable income. And again, as the calculations that we did on Tuesday, we know that there are some pre-tax benefits that we may have to subtract, and there are some taxable non-cash benefits that we may have to add before we get to that point. Right, so there are some calculations that have to go into figuring out this number. It's not total income, it's taxable income. Your book, by the way, your book and your problems may not refer to it as taxable income. I like to refer to it as taxable because ultimately that's what is taxable, but sometimes you'll see gross income, or just be careful with that wording. I mean, you've seen me mess up with the wording in some of those questions. If you're not getting the right answer, go back and very carefully, that would be my first step, carefully read that question. So for both of these, we need to know the taxable income. For both of these, we need to know the frequency of pay. Are they paid biweekly, weekly, monthly, semi-monthly? What is that frequency of pay? Now, these two last ones are different. For the post-2019 method, which is what we're starting out with, we need to know filing status. And remember, we've got those 5 filing statuses: single, married filing separately, married filing jointly, head of household, and qualifying widow or widower. Okay, so that corresponds with the filing status that they've indicated on that W-4 form. And that filing status is what they're using on their tax return when they file their tax return as well. And then also we need to know whether they checked that box or not, right? So also, there may be we may have to consider, actually before we, how do I want to say this? We have to do all of this in order to then apply this information to whichever method we're using. That child tax credit that we talked about and the credit for other dependents, remember I said that section 3, you may have some problems that involve that as well. That comes into play after we've figured out all of this. Okay, so it's kind of a last step in the whole process. Once we have the withholding amount, if there's anything in that section 3 or the section 4, but we don't really do anything with section 4 in this class, but if there's anything in that section 3, then we have to calculate that after we figured out what the withholding is. And then we make an adjustment to that withholding, okay? But just for our purposes right now, these are the four pieces of information. So you'll see here for the old method, the pre-2020 method, we're not asking about filing status. We're just asking, are they married or single? And again, that's something that's going to show up on the W-4 form. And you'll see, I'll show you that the W-4 form was different before 2020 as well. So one of the questions it asks is, are you married or are you single? It doesn't ask about filing status. And then they also, the fourth item is this, and you probably aren't familiar with what these are, and maybe you are if you filled out one of the old W-4 forms, maybe you know what I'm talking about with allowances. Allowances correspond with an item that is no longer on the income tax return. Used to be that the old income tax returns would ask you how many exemptions you had, how many dependents you had, corresponded with an amount of deduction that you would get. So for example, if there are 4 people in your family, you would get 4 exemptions. For each of those exemptions, you would get a set amount of money deducted from your tax return. So like $4,000. So you get, it's kind of an additional deduction, type of deduction. So you would get to deduct $16,000 from your income before you calculated your tax. Well, they did away with that. There are no longer any exemptions. And because those exemptions corresponded with the number of allowances that people would claim on their W-4, they did away with that as well. But we're still using this form, so we have to be able to calculate using those allowances as well. Has anybody ever filled out one of the old W-4 forms? Yeah. Okay. So do you remember the allowances? It was 0 up to however many. And the more allowances you had, the lower your withholding would be, because presumably the more allowances you have, the more individuals on your tax return you have, the lower your tax is going to be. So it would lower the withholding. So there was an inverse relationship between the number of allowances and the amount of withholding. Okay. So again, we'll go through that when we talk about this. But I wanted to, and you can take a picture of this if you want, but I did put it on Blackboard. I don't know. I think I mentioned this to you guys. There is a place on Blackboard, and I'm going to show it to you again. Here. Where down toward the bottom, I've got a link to these whiteboard images. So if I've taken a picture of it and I've hopefully posted it to here. Now, I miss taking pictures of everything, but all of those whiteboard images are there. This one is up there as well. Okay, and hopefully I've got them titled so that you can understand what exactly they are. But so so it's already up there. If you don't want to take, you don't have to do that if you don't want to. Okay. All right. Let me get this out of the way now. So that being said, I am going to erase this because presumably I didn't. Yes. Okay. So I still have this here. We can refer to it with regard to these items. But I suppose I could move my coffee out of the way. All right, so let's do some calculations. And again, we're going to start with this post-2019 method. So we got the wage bracket method and we got the percentage method. Wage bracket method, as it mentions here, is the easiest method. That's where you get that taxable income, and then you look at a table and you figure out what it is, what the withholding is. The percentage method, again, that they mention applicable to highly compensated individuals, so those who are earning more. That's what we're going to use if we can't apply the table. There are some other methods that are used, but they're very infrequent. So we're going to just focus on these two methods as well. So filing status, you'll see filing status, frequency of pay. See, they mentioned gross pay here. It's taxable pay, right? Taxable pay, and again, then any additional information. What didn't they mention here? Oh, well, this is included in that additional information from steps 2 through 4, because if you recall, step 2 is where that checkbox is. Okay, so that's just to kind of refresh our memories. Now, let's look at some examples. And I'm gonna throw some numbers out at you. And so if you've got, so you don't have your computer with you, if you've got the table and the methods available to you, and maybe you've got, I don't know if you have your book with you, or of course you could also look up on your phone. You'll want to refer to those items when we do some practice stuff. But here we've got Nani's annual salary is $40,144. Okay, so they're giving us an annual salary. We've got to figure out on a per pay basis what she's making, what her taxable pay is. She's paid bi-weekly. All right, so we've got that frequency of pay there. Her W-4 shows married filing jointly. Great, we've got our filing status. No entries in steps 2 through 4. So that would be the checkbox. So that would be a no. Checkbox is not checked if there's nothing entered in there. Right? So I'm going to erase this one so we can do some calculations. You know, they've kind of done the calculations for us here. First thing you're going to want to do when you get, obviously when you're given the annual salary, you want to figure out on a per pay basis how much is being made. Now, if you have an hourly employee, you're tracking their hours every pay period. You're going to be calculating what that taxable pay is every pay period. Nani happens to be a salaried employee, just for ease of calculation, but we can, if you're given, you know, Kathy worked 44 hours and is paid $10 an hour and is paid weekly. So now you know, okay, 40 hours at regular pay, we're going to have to also add that 4 hours of overtime. Add that together, that's going to be her taxable pay, presuming we don't have any pre-tax deductions or taxable non-cash benefits that we have to add to that amount. Okay, so you're not necessarily going to, if you're given a salary and you're given an annual salary, then yeah, you're going to calculate what it is on a per pay basis. But if it's hourly, you're going to have to do some additional calculations, remember, to get to that taxable pay. All right, so we've got all of that information. We can figure out what she's paid on a per pay basis. So she's paid bi-weekly every 2 weeks, so there are 26 of those in a year. We're going to divide that annual salary by 26. And her biweekly gross, so this is her taxable pay, $1,544. So we've got that piece of information. So we've got that taxable income is $1,544. The answer to number 4 would be no. So 1, 2, 3, 4. Frequency of pay is biweekly. Filing status is married filing jointly. You'll see me abbreviate these a lot. Okay, so S is single, MFJ, married filing jointly, MFS, married filing separately, head of household is HOH, and qualifying widow or widower is just QW. Okay, so just for reference. So we've got all of those pieces of information answered. We can figure out what her withholding is. Okay, so we are now going to have to reference the table. I'm gonna have to pull it up. I'm sorry, I didn't get it pulled up before y'all came in. Oops. Where are we? Oh, come on now. Did I log out? I did not log out. Oh, I did log out. I mean, I didn't log out. I exited. So this is where you would go on Blackboard here and pull up all right. In chapter 4, oops, course content. I'm hoping that Canvas is going to be a lot less clunky than this. I do an awful lot of clicking. I don't know about you. 4, there we go. Should be in chapter 4, videos, lectures, and resources. We need this publication 15T. All right, so we've got this guy up, and we're using our wage bracket method, and it's for post 2020, from 2020 or later. Okay, so there we go. Well, I'll show you how this all works. You would use this if there was anything included with regard to child tax credit, anything in steps 3 or 4 on that W-4. That's the main time when you would use that. Okay. So 1544, first off, we have to get, so we've picked out the wage bracket method, which method we're using, and whether it's pre-2020 or 2020 and later, right? So we've got that. We've got to get the right chapter, essentially, of this book. Now we've got to figure out, okay, we got to get onto the right table. This is not the right table. This is weekly. So remember to always look up at the top. That is probably one of the most common mistakes that students will make, is they're looking at, they know all the steps, they know how to do the calculation, but then they find themselves on the wrong table, okay? So we're going to look at the biweekly table. Scroll down. Okay, so here's where we start with biweekly. And we've got our income range over here to the left. So we have to find her income. So 1544 is what she makes. So 1544 falls between 1530 and 1550. Okay, so we've got the right line, the right row. All right, now we have to get the right column. So up here at the top, we've got, and if they are a qualifying widow or widower, they would also use the married filing jointly. Okay, I don't think you've got any problems that have a qualifying widow or widower there. So, but you would, just FYI, you would use the married filing jointly. Okay, so we've got 2 columns here for married filing jointly, 2 for head of household, 2 for single or married filing separately. So we have to pick out the filing status that we're using. We're using married filing jointly. Okay, great. Are we using the left-hand column or are we using the right-hand column? So if the box was checked, we're going to use the shaded column, the one that's to the right. If the check box is not checked, we're going to use the column to the left under the correct filing status. So that's why we have to have this piece of information. All right, so checkbox was not checked. Married filing jointly, one of these 2, it's going to be the left-hand side. We've got the right table up there on 1544. Now all we have to do is find the row. So 1544, standard withholding, $54. So you can see where that is, and I know those of you out there can't see this because it's too small. If I make it too big, it's gonna get weird. Let's see here. Maybe none of you can see it because it's too small. Let me make it a little bit, see if I can make it a little bit bigger anyway. There we go. Okay. So that's where you would find it, $54. Now, one thing I want to point out, just to kind of give you a little preview of, I had mentioned that you're going to get a different result if you use the other method. You'll notice this is a range. We got a $20 range of income here. So if you're at 1530, your withholding is going to be $54. If you're at 1549, your withholding is going to be $54. The other method, when we're calculating, we are exactly precise. So it won't be exactly $54. This is essentially the calculation for about the middle of that range. So like 1540. Okay, but if you're using this table, you can use a range. You'll also notice, so in this range, we go 1530 to 1550, and then we start with 1550 on the next row. Well, what if their income is exactly 1550? The rule is you use the second row down, okay, the last row. And you'll see in the instructions, by the way, there are instructions on almost every form. You just have to read them in the right order. Sometimes it's kind of hard to read them in the right order. You'll see, though, in the instructions here, if the adjusted wage is at least, so 1530 would be at least 1530, but less than 1550. 1550 is not less than 1550. But it is, if you go to the next row, it would be at least 1550. So that's why you want to use, but just to remember, you know, you don't have to reference that every single time. Just remember, I'm going to use the next one, the second row. Okay. You will see, so let me show you here. So we go to the next page. We're still on biweekly, but you can see that after, oh, now we start with semi-monthly. That means that anybody with a wage of at least $38.20 on a biweekly basis, doesn't matter what their filing status is, but on a biweekly basis, if they are making at least $38.20 in taxable wages, we can no longer use this table because it doesn't go beyond that. Okay, so it's just to make it manageable, right? So you'll see also, let me show you one of these other frequency, other payroll periods. So here's semi-monthly. If you were semi-monthly and paid $41.20 or more, then you're going to have to use the percentage method because the table doesn't go beyond that. So you can see why this number, this top number, changes for every frequency of pay. It also changes every year. So that range is going to change. So I can't just give you, I can't just say, oh, if they're making over $5,000, use this method. You've got to figure out, okay, which method do I have to use? Some, it's easy to figure out. If they're making $10,000 a week, you're not going to be able to use this, right? For some, it's very obvious. If they're making $200 a week, it's obvious you're going to be able to use this. All right, so $54. And we got the right answer. Isn't that good? So $54 is the withholding using that table. Let's look at, let's see, steps. Okay, so this one is going to use the other method. So I want to do, let's practice a little bit before we go on to the percentage method. Let's practice a little bit with the wage bracket method. Using your, so you guys can tell me. Give me a taxable income amount. Something that's going to show up on it. So don't give me a ridiculous number. Give me something that's, you know, something between 0 and 2,000. Taxable income. Throw something out. Doesn't matter.
1,750.
1,750. Frequency of pay. Biweekly. Filing status? Married. Single? Is that okay? Checkbox, yes or no? Yes, okay. Why? All right, so using your tables, take a look and see if you can find what the answer is, how much withholding there would be. I don't know either, so. So biweekly. So remember, first thing, look at the right table. So biweekly, single, yes, 1750. Oh, that's a good one because it's right on the line.
Much.
I heard somebody out there. Where are you? Let's see, somebody had something. Okay, I've got one answer here. What do you guys think it is?
1,007 much.
Is too much.
Because I'm got here 1,405. That's the last one. I don't know if.
I think so it should show up on the table. It would fit on the table.
248.
248. So there's one answer, and I have another one, 144. 144. Anybody else have anything different? I should have brought prizes. Although those folks out in virtual land wouldn't get any. What do you think? I see another, so I see another 144, and I see another 248. I see 144. 144.
248.
248. Oh, we've got
I see 246.
248. Let's see. So, oh, Tammy, you're changing your answer. Okay, so 248.
246.
246. Also, make sure you got the right year.
Oh, wait.
So, all right. So let's take a look at what we got here. All right. Okay. So we've got, oops, I can't see that. Okay. So we want to make sure, so we've got biweekly pay period. So we've got, make sure we're on the right line here, or right page. Okay. So we are single, which means we're going to use one of these two columns. Single with the checkbox is going to be in the right-hand column. Okay, so we know we're going to use this right-hand column, the very last column. Now we've got to find our income range. So let's see here, 1750. Okay, so this is why I said this was a good one, because it falls right on the line, right? 1730 to 1750, but remember, we want to use the next one. So this is the row that we want to use, 1750 to 1770, which is going to get us, if we can get over here, 248.
Exactly.
Huh? There you go. So 248 is the correct answer for that one. Whoops. So, okay, so and you had said 246. Are you on the wrong table? Okay, so that's a perfect example. If you're on the wrong table, you're going to get the wrong answer. So you've got to be very precise with which table you use. Okay, should we do another one? We'll do one more before we move on.
Maybe for another year.
For another, we'll just stick with 2022. But yes, if it were a different year, so like 2023, everybody who's using these right now in 2023 are going to use a different publication. It's going to be the publications can have the same name, but it's for a different year. You'll notice that this publication, the 15T, tells you right there, for use in 2020. So whenever that employee is getting paid, if it's in 2020, we're going to use this one. Okay. But yes, it would be different. So we're not going to use we're not going to be using this anymore, right? In practical terms, we'd be using 2023 in practice. For this class, because I saw the horror on your face, for this class, we're going to use 2022. Okay. But if you were actually out there practicing, you'd be using 2023 because that's when we're paying people, right?
Yeah, but there is like pre-2020 and post. What is that?
Okay, so that relates to the W-4. That relates to this form. So I know. So, and that can be very confusing as well. If we're talking about, okay, if it's I've got a pre-2020 W-4 form, you're thinking to yourself, okay, it's in 2020, so I've got to use the 2020 publication 15T. No. This year only relates to whether we're using the pre-2020 methods or the post-2020 method or the post-2019 methods. Okay, so you'll see in that publication, it has both methods. You got access to both. So you can see, oh, that's so big. We've got wage bracket, 2020 or later, wage bracket, 2019 or earlier. So whichever W-4 you're using, you're always going to use the same publication, but the W-4 is going to determine which chapter, I guess, in here you access. Okay, so but yes, it can be very confusing. All right, so let's do another one. All right. Let's do, give me an annual wage. We'll do that. Or actually, give me an hourly rate and number of hours that were worked. So we'll do weekly. We'll say weekly. You can give me something with overtime. 44 hours, okay. What's the hourly rate?
$17.56.
$17.56. Okay, great. So there's that information. So I'm not going to give you this. You're going to figure this out. Filing status?
Head of household.
Head of household. Checkbox, yes or no? No. Okay. Okay, so there's 44 hours weekly, $17.56 an hour. So you have to figure out what that taxable income is. I won't give you any pre-tax deductions. Just be aware that if you had any, you have to figure those in and all this information. All right. Have at it. 1756, sorry, 1756 hour, 44 hours, head of household, and no checkbox. Okay.
$807.
So we've got one that's 807, you said?
Yeah, 807.76.
Oh, so you've got this for 807.
Yeah, 0.76.
Oh, 0.76. Okay. So this is you're saying this is the wage. Let's not give people that. They need to come up with that themselves. We'll let them do their own legwork.
Yeah.
Over here, you guys can use your own. got, when you think you've got a number, let me know.
47.
47. 47. Let me pull up. Sorry, I can't see you guys out there. 47, 47. Anybody have anything different? No? 47? Okay. How about you, Ann? Is that what you get to?
No,
Okay, what do you have? That's all right, you can be the contrarian.
oh, so, and if federal income tax, FICA, or tax.
Just the
income,
federal income tax.
Oh, 47,
47.
yeah.
Okay, I see a pattern here. All right, let's take a look. I also have 47. All right, so 807.76 is the wage. So we've got 40 times 1756, and then we've got 4 times 1756 times 1.5. Right, so 702.40. Oh, so short. And then 105.36, which gives us a taxable wage of 807.76. So 807.76, we're on the weekly payroll period. 807 falls between 805 and 815. We've got head of household, one of these two. No checkbox, so we're going to use the row on the, column on the left, $47. Okay, make sense? Think you can do it? I know it's a lot of steps, and by the way, this is the easy one. You just have to, it is easy, you just have to make sure you're looking at the right thing, right? At the right table, right page, all that stuff. Again, if you get it wrong, my advice is to first look at that. Are you on the right page? Right? Okay. My next advice would be, are you on the right column? This is probably the easiest one to figure out. Got the income range here, but again, this is no checkbox, checkbox. So if the word checkbox is there, that means yes, checkbox was checked. Okay. All righty. Should we move on to the next one? Yeah. Okay. Okie doke. Let's see here. Now, we are going to have to use, let me find the, okay, so now we're going to use the percentage method. So you can see there are two choices here for using the percentage method. Well, actually, there are three. Be careful of this because there are some problems that ask you to use the percentage method for automated payroll systems. This is for manual payroll systems, so make sure you're on the right one, okay? This one you can use for either of those 2019 and earlier or 2020 and later. You do have problems that ask you to use this form. In fact, we can use this. Let's take a look at it real quick. It's it always starts out, let's see, this pay period. Oh, that's for pensions. You can see, okay, this is when you've got an annual, you use an annual amount. Even if, but you do start with, on this worksheet, you start with the pay period amount. So for example, you can see on this worksheet, enter the employee's total taxable wages this pay period. Say it's $1,000. Enter the number of pay periods you have a year. Biweekly, we'll say 26. So multiply those, 26,000. Then you've got this other, if you are using the 2020 or later form, you use these, you follow step 1 here, or 1D through 1I. If it's an earlier form, then you use steps 1J through 1L. Okay, so you've got to, again, you just have to read. All the instructions are there, but it's the reading of the words can be difficult sometimes. I have the same issue. So depending upon which of those two W-4s were used, you would fill out either that part or that part. And you're going to get a number on here, this 1L. Now, assuming, let's see, filing status, marital status. Yeah, okay. So once we've got that number, then we are going to use some tables down here. And oh my goodness, look at all those numbers. And we're going to figure out what our tentative withholding is. Now, when I say tentative withholding, that means we haven't calculated yet anything that might be in boxes on lines 3 or 4 on the W-4. If there's nothing in those boxes, then this is the withholding. If there is something, then you've got to do some extra steps. And if you follow the form, and the forms are here, just use the right one, don't use this one. This is for pension and annuity payments. But follow this form, you can figure it out. Okay, now I know it's kind of scary. It's a lot like a tax return, but if you read carefully, you can get that. So anyway, if my point with looking at this is be careful of the wording on the questions. If they ask for an automated system calculation, you're going to use this. If they don't, I'll show you what we're going to use. And this is what we're going to practice with. If it just says a manual system, then you're going to use one of these. Whether in this, if it's 2020 or later, it's got a separate chapter from if it's 2019 or earlier. Those automated systems, it applies to every W-4, right? Okay, so, and I know, great, you're looking a little grumpy, Kathy. All right, so let's assume that we have well, actually, this is a good example. We'll just stick with this. Even though we found this on the table, I'll show you how, what was our answer was 47. Let's see what the answer would be using this other method. Now, when we use the other method, once we get this amount, we have to do some calculations. So as before, we just used the table. We referenced the table. Now, when we're using the percentage method, we have to do some calculations with that. Okay? We still need all this information in order to do those calculations and in order to get the right calculation, because the calculation we use is going to be based on this information. Okay? Okay. So let's look. So 2020 or later, we're going to go down here. This is okay. So you can, when you're doing a problem, you can use this form or the automated systems form, depending upon which one they want you to do. You can follow all of these steps. So if you forget the steps that we're going to go through, you can use this and follow the steps and you'll get to the same place. Okay. All right. So, and in fact, let's, oh, this isn't fillable, but, so employees' total taxable wages this pay period. Now, in this case, so 807, what do we get? 807.76 would be what we have on box 1A. This is kind of silly because they have you, well, I guess they're including the step 4 in this. We don't have a step 4 for this particular employee. They didn't fill it out. So enter number of pay periods that you have per year. So if it's 807.76, there are 52 pay periods, so we would get the annual amount. Now, one of the steps down here is actually going to then be multiplying it by the number of pay periods. So, or dividing it, sorry, by the number of pay periods. So we're going to get to the same number that we started out with. So you'll see, so enter number of pay periods you have per year, 52. Enter the amount from step 4A, 0. We don't have anything in our step 4A. Divide line 1C by the number on line 1B. So we're getting right back to our 807.76. So it says, okay, give me 807.76, multiply it by 52. Now divide it by 52. Same thing. So 807.76 here. We don't have anything in step 4B, okay? So we wouldn't enter anything on line 1F. Divide line 1 by, or 1F by the amount on line 1B. We don't have to do that because this is 0. So the answer is 0. Subtract 0 from 807.76 and we get our adjusted wage amount of 807.76. That's how you would fill that out. For all of your problems, you are not going to have anything on this step A, 4. You're not going to have anything there. Okay, I shouldn't say that for sure. I don't think you have anything in step 4A. But if you do, you can follow this to get to the amount. What that's doing, that step 4, if you remember, that's additions to income. So you have other income that you wanted to have the withholding from this paycheck to take care of the tax on that other income. So it was an additional amount that you were adding. So that's what this does, is it adds that income in there. Okay. I don't know what that was. Nobody here. All right, so I don't know. All right. Let's see. So these are the steps. Once you have that tentative withholding amount, you can follow these steps if you forget what I'm going to tell you here. Okay, when I do this problem, I'm not going to use this when I do it, but these steps tell you, they take you through the same calculation. Okay, and I'll show you. We'll come back and do that after we've done it my way. All right, so. Like I said, there's some additional calculation that's required. Now you'll see we have a page that is full of tables for each of the separate pay frequencies. So again, first thing you got to do, what's the frequency of pay so that you can find the right page. Okay, so in this case, it was weekly. Great. Now, we also need filing status because each of these pages has the separate filing statuses listed. Okay, so let me see if I can get that in. So we have a head of household, which means we're going to be using one of these sets. Okay, so we can ignore everything else. because it doesn't apply to our filing status. Now, just like we had 2 columns on the table, we have standard withholding on the left-hand side, which means no checkbox. Checkbox withholding on the right-hand side, which means checkbox. So on each of these pages, now that you've got the correct frequency of pay here chosen, you're going to find which of these tables you're going to use. So for us, there's no checkbox, so we're going to use this table here. Okay? Okay, so we got the right table. So, I mean, just half of the work is figuring out, do we have the right table? Okay, now again, like almost every other IRS form, the instructions are there. It's following them. And it's kind of weird because it's not like in a sentence where it's very, really easy to see what the sequence is. These instructions jump all over the place. So if the adjusted wage amount that you got from that calculation up there, from the worksheet that you put together, is at least but less than, same wording, right? So if it's exactly on this line, we're going to go to the next line. So if it ends up being $893, we're going to go to this second column. So, okay, so we've got the right row here. The tentative amount to withhold, and I say tentative because we haven't included if there's a child tax credit or credit for other dependents that we have to take into account. And again, that would have been in section 3 on the W-4. We don't have anything like that here, so this is the amount that we're going to withhold. All right, so so 807.76 is between 498 and 893. So, okay, we know what row we're going to use, and we don't have to pay attention to that. The tentative amount to withhold is 0. Okay, that's easy. Well, wait a minute. I had 47 over here. This says 0. We're not done yet. 0 plus this percentage, so in our case 10% of the amount that is over 498. Okay, so what is the math on that? We're going to take our amount, 807.96, and we are going to subtract 498.
You don't stay in the right place. This one is very joint.
Oh, you are right. You are absolutely. Thank you.
Yeah, I miss it right now. So.
Okay, you are absolutely right. Good catch. I guess the 807.96 could have been safe. I wanted to show you so that you can see the instructions up here. But I guess it's hard to see both. Okay, so head of household. So 807.76 for head of household. Okay, so we're in a different row here. It's at least 655, but less than 1448. Tentative amount to withhold is 2820. So my advice is, okay, write that number down. So we've got this over here, 2820, but we're going to have to add more than that. 2820 plus this percentage of the amount over this. So anything over and above $655 is going to be taxed at 12%. So let's figure that out. You're going to take the wage, I'll do it down here, 807.76 minus whatever it says here, okay, minus 655. So 76 to 142.76.
I get 152. I don't know if it's
Oh,
correct.
yeah, you're right. I was looking at the wrong. 715. I was looking at, I had my line, it's not lined up. All right, 152.76. We're not done because we don't need to take the whole 152.76, only a percentage of it. 12% of it. So times 12%, what does that equal?
18.36.
18.36? Is that what we get?
We get 18.33.
You get 18.33. Let's see here. We've got a little disagreement. Okay, so we've got 152.76 times 0.12. 1833 is what I get as well. 1833. And we're going to add that to that 2820 because that's what it tells us to do. Right? It tells us to do that in the instructions. Plus 12% of the amount over that 655.
46.53.
Okay, so 1833, we get 46.53. There's our withholding. Awfully close to 47. Not exact, right? Because this method is exactly the withholding to the penny. Now, what will happen oftentimes as well, even if you're using that, and I'm telling you this in practice. Your problems probably don't go through this, but oftentimes this will be rounded. Because when we're filing our tax returns, our individual tax returns, the IRS does not want us using pennies. They want us to round. So if we said 46.53, the IRS would have been rounding up to 47. You just lost 47 cents. So, I mean, it's small, but if you've got several jobs. But anyway, that's what a lot, and that's up to the payroll department, the company, whether they're going to round it or not. So when you get your W-2 form at the end of the year that shows how much has been withheld, if there are pennies there, like if your total withholding for the year has pennies, that gets rounded up to whatever. All right. So that's a good illustration to show the exact amount versus what was on the table. Let's go through another one. So I'm going to have you guys give me information. Again, now you can find some ridiculous number. Give me your dream wage. How do you multiply by infinity? Give me a wage.
77,777.
Okay.
I really like that.
Oh, okay, Lisa, we'll do that one afterwards. So 77, and how frequent are they paid?
Every other day.
We're not going to do that to the payroll department. How often are they paid? Monthly, okay. Filing status?
Married?
Married. Married filing jointly?
Yeah.
MFJ, checkbox, yes or no?
Would it change a lot if it's married filing separately?
Then you would use the single table.
Can we use that one?
Married filing separately, sure. MFS? And checkbox, yes or no?
Yes.
Yes, okay. Okay, so again, first thing we want to do is find the table that we are going to work with. So this is monthly pay. So we are going to find the monthly tables. Okay, here's semi-monthly, there's monthly, right up there. I wish they would make this bigger. Like it's so tiny. So it's easy to overlook. Okay, now we're gonna find the filing status. Okay, married filing separately, it's gonna be right here. One of these two. Okay, and it says right there, single or married filing separately. All right, so we got our filing status and our frequency. Checkbox is yes, which means we're gonna use the table on the right-hand side. Checkbox withholding over here. So we have it narrowed down to that table. Now you can see we're off the charts. All right, this is 23,035 up to infinity. Yeah,
Don't you have to make it per pay period?
this already assumes it.
Okay.
Yeah, we're doing 77,000 a pay period, right? Yeah. So this is per pay period right here. Okay, so we're gonna use these calculations here. All right, so tentative amount to withhold is 6,779.73. We'll just pop that up there so we don't forget it. Plus 37% of the amount over 23,035. So we've got to figure out 23,035. We're going to subtract that. So we have 2, 4, 7, 4. So 54,742. We're going to multiply that amount by 37%. What do we get?
We get 54,742.
Yeah, 54,742 times 37%.
20,254.54
20,254.
20,254
Okay.
and 54 cents.
20,254.54. We're going to add that to this. Add those together. 7, 12, 4, 8 plus 5 is 13, 10,
27.
7. There's our withholding. That's just federal withholding. Forget there'd also be state withholding. If this is the first couple of pay periods, then yeah, there would be FICA, there would be Social Security, we're gonna have Medicare, we're gonna hit that additional Medicare tax pretty quickly as well. So other withholding, but this is just the federal income tax withholding. For someone who makes $77,777 on a monthly basis and has a married filing separately filing status, and they have the checkbox. They have the checkbox, that means they have another job or their spouse has another job where they're making about equal. That's not a bad wage per month. Okay. Should we, let's, now I was going to show you, if you follow the form, where is it here? If you follow the instructions on the form, on this worksheet, it takes you through the same steps. So here, find the row in the standard withholding rate schedules. The percentage method in which the amount on line 1H, that was our tentative wage amount, that's this amount here. Where are we here? Is at least the amount in column A, but less than the amount in column B. Enter here the amount from column A of that row, okay? So in our case, it was, what, 23,035. Enter the amount from column C of that row. Enter the percentage from column D of that row. So it's taking you through all of those steps that we just did. So if you forget If you get mixed up and you're like, I can't remember what I do next, there are two places you can find the instructions. One is on the form itself, up here, right? Echo. You can find it there, or you can go back to that worksheet and find it there in step 2. Okay? So let's practice a little bit. I'm gonna have you guys give me another one, and I don't care whether it's ridiculous or not. Doesn't really matter. And see if you can do it.
48 and we'll hit 15.
I'm sorry, so,
48 hours
okay, so 48 hours
and 15 hours.
and $15 an hour. And we'll just assume, we'll say weekly, okay? All right. What's the filing status?
If he's under, I'm sorry, in parentheses, if he's under a P's method, we will have to go and calculate the P's and then the hours.
Yeah, you have to do that too. Yeah. What's the filing status?
Married,
Married, what?
joint.
Okay. MSJ?
They get along, yeah.
They get along, okay. Checkbox, yes or no?
No.
No. All right. There's your information. See if you can figure it out. Use the percentage method. With this, you probably could use the wage bracket method, but I want you to use the percentage method. Okay? And I'm going to do it too. I have no idea what the answer is. So, oh, sorry. Oh, I'll put the yes for manual. So let me type this in here. 48 hours. There you go. There's all your information, your data. All right, can you guys see that?
It's 15?
15, yes, that's $15 an hour. Sorry, my handwriting.
But then if in some case, like the employer is paying for a gym subscription or something, we will be adding that to this amount or the later amount.
Yep,
That amount.
to the amount that we come up with here for the pay. Yep. If you have tips that you have to deal with, you're going to have to include that in the, if you're reporting tips, all that stuff. So, of course, a good way to check if you're on the right track is you could then use we could use the wage bracket method for this. You could look at the tables and say, is it about the same? It's usually not gonna be any more
Is
than.
it yes or no?
No.
Is it no? Oh.
If you get an answer, feel free to shout it out. Okay, so we've got one.
28.2.
Okay. Got another 2820. I'm not saying that's right, so if you're not done yet, keep going.
Maybe I'm wrong.
Mhm.
12:45.
1245. Okay. Anybody else?
I think it's 28.2.
Another 2820. Okay. Yes. What's that?
I have the 2019 number.
20. Oh, you were using the 2019. Yeah. That's good though. No, it's good. It's good when mistakes like that are made because it reinforces it, we learn the most from our mistakes.
So simple comparing to the charge.
The 2019. Yeah, there's a couple of steps though that like those allowances, you have to figure those in. No? Okay. I tell you what, so we're almost out of time here, so let's go through this. All right, so we've got 48 hours at $15 an hour. They're paid weekly. So obviously we've got 8 hours of overtime in here, right? So 40 times 15 plus 8 times 15 times 1.5. I got that right? So 40, what, 600? And 8 times 15 is, what do we have? How much? 180? So 780. We put 780 there for our taxable income. All right, so let's look at the table here. Whoops, come on. We have to find the right one. All right, so paid on a weekly basis, weekly payroll period. Got it. Married filing jointly. One of these two. No checkbox. We're going to use one on the left. All right, so using $780, we're going to find where that lands, which row. Okay, 498 and 893. So we're going to use that row here. So our tentative amount is 0. So we don't have to, write that down. I think we can remember that it's 0. Plus 10% of the amount over 498. So we'll have to figure out 780 minus 498 is, what is it? What is that? Somebody tell me.
Yeah, 282.
282?
Yeah.
All right, $282. 10% of $282. 2820. Let's look at the table and see how close we are. Okay, or at the the percentage tables. So let's go back up. So percentage method 2020 or later. So, oh no, not percentage. I'm sorry, wage bracket method. I'm in the wrong place. Wage bracket method for 2020 or later. That's another thing. You have to make sure, at least on your problems, are you using the method that they want you to use?
28.
Okay, so weekly payroll period, $780. Down here, 780 is between 775 and 785. Married filing jointly, no checkbox, $28. Pretty good. Okay. Questions?
Well, in my case, I forgot to multiply the overtime.
Oh, there we go. So you
tax
had the wrong
Yeah.
taxable income. Yep. There are lots of opportunities to make mistakes in these problems. If you're really good with Excel, you could set up an Excel spreadsheet that did all this as well, as long as you understand what it all means. That actually might be a good practice as well, because it would force you to look very closely at those tables. But it would be it would be a lot of work, because you're dealing with checkbox, no checkbox, what's the frequency?
You'd also have to put in each and every row in.
Yep,
So yeah, it would probably take hours.
it would. But if you were doing this all the time, it would be, it would be worth it. Yeah, although there are also programs out there that can just do it for you. But, all right, any questions? No? All right, so we will end there for today. When we come back on next Tuesday, and remember I said we probably have some time to lead into the following Thursday if we need to. Supplemental wage withholding, that's where, like, if you get a bonus or something, there are a couple ways to figure out that one. And this is super easy, by the way. There's also gross up of supplemental wages. This one you'll want to pay attention to. I know you've got some problems on it. This is where you know how much you want the employee to receive. See, here, we know what their taxable income is, but we don't know what their net income is yet. We have to do all these calculations. This is okay, we know what we want them to receive, what they want, what they're going home with, how much do we pay them? What's this gonna be? We back into that. So I'm given a bonus of $1,000. I want my employee to actually have $1,000. I know that I'm gonna have to, that taxable income is gonna have to be higher than that, because I've got to take into account federal income taxes, state income taxes, Social Security, Medicare taxes, all that stuff. What is the taxable amount? Okay, so you're going kind of the opposite direction. What else are we gonna talk about? The W-2 a little bit. I'll just give you a little tour of it. I don't think we need to go into a whole lot of detail about the W-2. You guys can, we don't really, the 941, all I'm gonna show you is where, I'm gonna show you where that, the federal income taxes go on that 941. We'll talk a little bit more as well about the fact that that amount may be different than the Social Security and Medicare wages that are taxable. I had mentioned that early on. I have to show you Iowa taxes and how they work. Iowa taxes work very similar to federal. They've got the same types of calculations. For now, we're moving to a flat tax in Iowa. So by 2028, we'll just have one tax rate. So we'll probably just have one withholding rate as well. Make it really easy. And then we'll go through 2019 methods, 2019 and before method, which again are very similar to this couple of differences. Okay, sorry, I kept you over. Okay.
Yeah.
Have a great weekend. Thank you. You bet. Bye, everybody out there. Yeah, Lisa, go ahead.
Hi, I do have a question after all. Way back at the beginning, when you showed us where to find that that 15T publication,
Yeah.
where is that? Because mine is also so small, and even though I make it really big on my computer, I still can't see it. So I'm going to have to print it, but I can't remember where it is so I can print it.
It's under the Chapter 4 Videos, Lectures, and Resources tab.
Chapter 4. Oh, no wonder, because I was way at the beginning. I'm like, come on, I knew that you showed us at the beginning. Okay, so chapter 4. Okay, chapter 4, and then go down to videos and stuff. Videos, lectures, resources. Okay, I see it now. Okay, thank you very, very much.
You are welcome. Everybody have a great weekend. Let me make sure I got everybody.
Yeah, I think 3 people came in after you started video.
Yeah, I know.
But I can't remember who they were.
Okay, I see the list here. Thank you.
Okay. Have a good weekend.
Yeah, you too.
Thanks.
Bye-bye.